Good afternoon, everyone. We have we have ended our trading session. Indian trading session is closed for today, and we are back with our live streaming session. It is our post market session and also the last session for today, where we will understand the value and what time value of money plays into the financial market and how it can help you to make some smart investment decisions and help you make a smart investors. So we'll understand the applications where we can use it and also the core concepts of time value of money. So before that, we have to go to the holdings which we had and what were the performances of the stock which we have done till today. So coming to our stock, we had this holding in our stock where the date of position establishment is given, the stock code is given, right? What are the date of position establishment, stock code, entry price is given, the 5% profit level is given, the first target price is given, and also the second target price is mentioned. So each and everything for stocks which we are holding is given, the position establishment, the stock code, where it is trading, it is in NSE or BSE, the entry price, where it we have the entry price 170, 175, the 5% profit level, the first target price and the second target price. What will be our long position? The 10 to 15% long position as well. We have come to the discussion of each and everything whatever we are providing, right? Each and everything is given to you. So just remember that whatever calls we provide are backed by a good research and backed by good analysis. For those who are new here, my name is Aditya. I am your live streaming analyst for today's session. For my professional journey, I have started my career back in 2018. I have started my personal trading from the year 2018 and have generated tremendous wealth for the client. I have managed more than 100 crores of rupees for the client and generated wealth for each and every client which I have come across. There is not a single client which have faced a loss being with me for the medium to long term, right? So you can be rest assured where you are getting your advice. Also, I want to mention that I am a NISM certified trader. Also, I am a research analyst as well. I am both. The certification are NISM certified, which is registered with SEBI. So you can be rest assured whatever the trading methods you are getting, the research you are getting, is you are getting from the certified uh, trader and research analyst. So be rest assured, we will start with the holdings we have. We had our holding. You can just look at it. We had our holding Hindustan Oil Expression. Each and everything is noted down here. We'll just look at its performance, how it has performed today. So out of eight stocks we had in our holding, five are positive, five have been doing positive, three are negative for today. Right, Punawala, you can see Punawala have closed 364. It has increased by 152%. We'll just go through, and we will just end the session. So now we will go to the sorry no we will not end, we will go to the second part of the session, right? So Punawala FinCorp, if we look at the Punawala FinCorp, we have our second entry, the third entry is given, the support is given, and the second entry is given, right? And we were expecting the Punawala to grow more, but it has grown, it has shown its potential, it is closing positive for today, right? If you have RBL Bank which have closed around the level of 179.05 and it has changed 0.54%. And for Aventel, we are seeing it has closed 0.93% above, and for DDEV Plastics, it has closed around 0.89%. So this is the condition of DDE Plastic Industries. For Hindustan, for Arkit Ply Industries, we have 2.5% change. For Hindustan Oil Exploration, IP rings are negative as of now, and Annapurna Swadhist, if we look, Annapurna Swadhist is negative as of now, 2.53% negative. So you can be rest assured, whatever holding we are having as of now, whatever the positions we have made is doing really well, right? And we are very positive about that. So this was our holding. We have provided you with the entry price as well. We have provided you with the profit level. Also, the first target price is provided and the second target price is provided. So you can be rest assured, whatever the positions we are making, we are exiting it on the profitability. If we look at the directions which we have till now, we have entered into 48 stocks. If you remove these, we have entered into 48 positions as of now. The entry point was 170 to 175. The stock was Kriti, opening time was 11, direction long. So this was the opening time we have, right? And the profitability which we have made is being great. So these are the stocks which we have: Hindustan Oil Exploration, Exicon. So these are the stocks we have. We have the opening time here, the direction is given long, the entry point is mentioned, the closing date is mentioned, and the take profit mark is also mentioned, and the profitability is also given here. So these are the profitability we have: the date, stock, opening time, direction, entry point, closing date, take profit, and profit margin. So these are the things which we are having as of now. Kriti, for Kriti, we have entered the position at 175 and we are waiting for the take profit mark very soon. Right, Kriti is in the critical level of 170. We are trading around that and we will be making some good profit and exiting that soon. So, till now, whatever positions we have made, we have just look at the positions we have made till date. So we have made 227% profitability till the start of our recommendation. We have started our recommendation on 18th of September. We are giving you with the free calls, free recommendations, and free live streaming till then. But remember, won't be free for very long. We will come up to that. But before that, just look at the profitability which we have achieved. We have achieved 227% of profitability. We have only closed 37 trades till date and in just 2.5 months. So these are the profitability we have achieved in just closing 37 trades. So just look at the profitability we are able to achieve for you. We are able to deliver it to you, and you are making a consistent gain out of market, right? Each and every one of us who invest in the market is not here to make any losses. We are here to make profit out of the market, only not profit, to make consistent gain, so that you are able to make profit and make consistent gain and be financial well-being. So each and everything is important. We are only here to make profit, not to make loss. Also remember that every mistake in the market, like every mistake you make in the market, is faced by a financial burden, right? You are facing a loss, so there is no chance of mistake in the market. Whenever you are making a mistake, you are losing your money, hard earned money, right? Whatever the hard earned money we have kept with us, you are losing that money. So just remember, you want the right advice and right guidance in the market to be able to achieve the consistent profit. So for that, we are here at the Dolphins Market, providing you with a lot of recommendations, research, and we are even analyzing the stock. We are even coming up with the concepts. We are explaining all the concepts which are important in financial market. Yesterday we have covered the concept of risk management, right? Why risk management is very important. We are covering the concept of futures and options, how you can trade in future and options, right? Also remember that we are here dealing in equities currently, but it will be not, we will not be stagnant at this position. We will be providing you with the free stock recommendation, right? Free stock recommendation till next 2 3 weeks. After that, we will be going to the VIP mode. What we will do in the VIP mode? Any guesses, guys? You can just type in the comment section what we are doing in the VIP mode. We will be dealing with only the serious clients, the clients who wants to make the serious money, right? Clients who wants to make the serious money in the market. So just remember, if you are here to make the serious money, be connected with us. Once we go for the VIP mode, we will be dealing with them only, right? Because we don't want our investors to just look at the market and wait for the right time. Remember, market, it's all about time in the market, right? All about time in the market, not timing the market. Just remember that you have to make your time, you have to gain some consistent profit out from the market, so that you are gaining a lot, you are being consistent a lot, and you have to make a consistent gain in the market, so that you are able to survive and be interested, be survival in the market. Most importantly, people who survive in the market for a long term becomes profitable in the market. So remember, you have to be survived in the market for making consistent gains, right? Consistent profit, and we are here to provide you with all the requirements you have, and whatever the doubts you have, we are here to solve it to you, and we will be covering up the discussions. So next, we will be, what we will be dealing today, we will be explaining you the concept of time value of money. So till now we have covered the profitability which we have achieved. We have shown the profits which we have generated for you. All the stock names are given, opening time is given, the direction is given, the closing date is mentioned, the take profit mark is mentioned, also the profitability we have mentioned. All the profits which we make ranges between the 5 to 15% range. Till now we have gained a lot of profit in it. And why we book our profit at 5 to 10%? Because it saves us from the market volatility. As you know, markets are very volatile. When the stock grows, it shows some profit booking in it, and it falls down. So to save you from that position, we do the profit booking as quick as possible, and make your portfolio green by making you consistent returns. So just remember, be consistent in the market. Making consistent profit is the key to survival in market and to make good gains in the market. So now, for today, we have come up to a concept. We have come up to a concept called time value of money. We will be explaining you the know all the no's and how's, why time value is important, how time values plays an important role in investment, making you a smart investor, what is the role of time value of money in investment, right? So we will understand the core concepts, just the core concepts and its applications, how, where we can apply the time value of money. So starting with that, just stay tuned. So, what is time value of money, right? What do you understand by time value of money? So, it is a concept, like it is a concept what money holds today, uh, uh, comparing to the future values of the money, right? So, if you are investing your money today, so you are expecting some returns on the stock. So you have to look, the gains which you are making is more than the future value of money, because there is a concept of inflation, right? If you're not making more returns than your inflation, then the returns which you generate will be reducing your purchasing power, right? Because inflation decreases your purchasing power. The amount of goods which you have purchased in terms of, just tell the amounts of good which you are able to purchase in 2010 and 2015, are you able to purchase now? No, right? Because everything has become expensive. Inflation is increasing on day to day, on year to year basis. right? So your purchasing power is decreased in coming future, will be decreased in coming future. It is decreasing now also. So whatever the goods you used to buy previously in rupees 100, you are not able to buy it now. You are only able to buy few goods as compared to the year 2010 and 2015. So your purchasing power is decreasing. Inflation is there, which reduces your purchasing power. To beat that, we invest in some securities and look into the future potential of that stock. And if the stock is providing you with a good returns, and if stock is providing you with a good returns and good investment opportunity, that's why you are investing in a stock market, right? Otherwise you will be keeping your money in the bank only, you will be not be gaining some returns. So for that, time value of money comes in between. What times value of money gives you? It is a concept that money available today is worth more than the same amount in the future due to its potential earning capacity. So as clearly defined, time value of money is the concept that money is available today, right? What is the worth of money today as compared to this potential future earning? So if you have 1 rupees, if you invest in some stock which has a potential of 10 to 15 rupees in future, right? So it has a future potential of 15 rupees. So that is the exact time value of money for that investment, right? So also remember, a dollar today is worth more than the dollar tomorrow. As we have explained, a dollar, we if we have today will be the more that it has a more worth than tomorrow. And whatever the currency you are holding, whether you are in holding Indian currency, whether you are holding the euro currency, it will be more worth today than tomorrow, because the inflations are coming, your purchasing power is decreasing, due to which time value of money plays an important role. You have to look what are the future potential earning capacity of anything, right, of a product, of a money, so that you are able to buy in the future more of a goods from the same amount of money today. Also remember, due to inflation your purchasing power decreases a lot. Now, looking into the key principle, a dollar is worth more than its dollar tomorrow. Right? These are the key principle. What are the importance of time value of money? It is a foundations, right? It is a foundations in financial decision making, in investment, loans and saving. Whenever you are trying to invest your money, you have to go through time value of money, whether you are getting a good returns or not, right? In loans, we whenever we provide the loans, you have to look the loans which we are taking, will we be able to repay it or not, the interest rate, the principal amount. When we take a loan, we pay with the principal plus interest rate, and all the services charges are included in it. For example, if you take a loan of rupees 4 lakh at 10% interest rate, right, it is compounded for 10% interest rate for 5 years. So you have to pay the interest of rupees 50,000 in next 5 years. So you will be paying how much amount of money in 5 years? You will be paying around 4 lakh 10,000 rupees, 4 lakh 12,500 rupees each year, by adding the interest on it, right? And when you are going to pay the interest, it will be deducted on a monthly basis. The all the EMI payments which you will do will be deducted on a monthly basis. So you are paying a loan with principal plus interest rate, adding up to some loan amount, and you are paying that loan. So just remember, whatever the loan amount we are taking, is it good as compared to, if you analyze, is it worth it, the money which I am taking according to the time value of money? Will it be more viable if I don't take loan now and wait for the purchase which I want to make, or do I want to take the loan and purchase it now? So you have to analyze all these things, the foundations, like the loans which you are taking, the investment decision which you are making. You have to understand all the concept, the decision which you are making, right? In for investment purposes, you have to look about the time value of money. And also the savings, when we are savings the money, we have to keep little amount of cash in our pocket, because inflation is coming. The money worth, a dollar worth today is more than a dollar worth tomorrow. Just remember that concept. If you are able to buy more of a goods from a dollar today, you will be able to buy less of a goods tomorrow. This is a simple concept of time value of money, including inflation. I have explained the example which reduces your purchasing power. Right? Why does money have time value? So it is very interesting to know why money have a time value, right? It has a opportunity cost. Money can be invested to earn return. So money can be invested to earn returns. You can invest in stocks, you can invest in mutual funds. You can there are many various intermediaries where you can invest. Stocks are there, mutual funds are there, bonds are there, real investment trusts are there, right? Where you will be gaining through the rental income, and all the opportunities which you have through SIP. You can invest in mutual fund, right? Through when you can invest through gold. So these are the opportunity cost you are having. You can invest in that and earn returns on that. So these are the opportunity cost where money can be invested to earn returns. Also, there is inflation decreases the purchasing power of money over time. It decreases the purchasing power over time. So we have discussed about the inflation. It decreases the purchasing power. What does it mean? Whatever goods we are able to buy now, we will be able to buy less of a goods tomorrow for the same amount of money, right? So this is the power, this is the explanation of inflation. Also, there are risks and uncertainties. Future cash flows are uncertain, right? Future cash flows are uncertain. You have to protect yourself from risks and uncertainties, because there can be future cash flow which are less and high as compared to now. And what are the preference for the liquidity? There is immediate access to funds is preferred, right? So immediate access to funds is preferred. So whenever you are having funds, liquidity is very important. Whether you are investing in stocks or investing in anything, liquidity is preferable, so that you are able to uh, get that more easily. What are the key components of time value of money? Just look at the key components. What are the key components? We have present value, right? Future value, interest rate, which is depicted by R, time period depicted by P, and payment PMT. So we will explain the key components now. So as compared to previously, why does money have time value? We are discussing about the key components of TVM. So what are the key components? Current value of future cash flow. This is the current value of future cash flow. The present value will be given, and it will be a current value of future cash flows. What are the present value of our money? Right? We have to know the current value. Suppose you are having $100, so the current value of that dollar will be 100 only. If you are having any gold or silver, if it's worth $100, it will be $100 today. But what is the future cash flow? Value of current cash flow at the future date. So whatever cash you are having, whatever the cash flows you are having as of now, what will be the value in the future? Just think about it. What will be the value of future? Suppose you have a cash of rupees 100, and at one point you are having a cash of, you are having a gold of worth 100, right? So after 10 years, your cash will be worth less than 100 what it is today. Your purchasing power will decrease. But if you have in terms of gold, your purchasing power will increase. Your purchasing power will be able to beat the inflation. So that's why gold holds an importance, right? So this is the concept of gold. Also, what is the future value? What are the value of current cash flows at a future date? What is the value of current cash flows, right? We have learned about that. Now we will come to interest rate. Like, what is the rate of return which we are getting, or the discount rate? Rate of return means when we are investing your money, where we will be getting, how much return we will be getting on that investment, how much return we will be able to generate on that investment. So that is rate of return, right? And here we have a time period. What are the durations which over which your money grows or shrinks? What are the durations which we have where the money will grow or shrink? So these are the durations which we have. Payment, periodic cash inflows or outflows. So these are the payments we have. We have the periodic cash inflows or outflows, right? How much inflows and outflows are taking for the payment. So you have to look into that. We have come to the conclusion of this slide. What are the key components? Present value, what will be the current value of future cash flow, the future value represented by FB, which is the value of current cash flows at the future date, interest rate, R, rate of return or discount rate, right? Also, time period T, duration over which money grows or shrinks, or PMT, payment PMT, periodic cash inflows or outflows. We have discussed about that. Now, basic TVM formula. What is the formula for calculating future value, present value, annuities, right? Future value of annuity, present value of annuity. So, what is the formula? For future value, we have to calculate future value is equal to present value into in bracket 1 plus rate of return, right? Rate of return is 2 by t. So this is the formula for future value, this is the formula for present value. Present value equals to future value divided by, we will just reverse this and we will get the future value. What will be the future value is this, and if we get the present value, we will just put this down and it will come here. The future value will be future value divided by this formula, 1 plus r into t time. So annuities, how we calculate annuities, future value of annuity will be PMT, like the payment into 1 plus r into t divided by r, rate of interest. So this is the future value of annuity. Present value of annuity will be PV into PMT. So these are the formulas where you can take the screenshot, right, and you can understand, you can use this formula to calculate the future value, the present value, the annuities, future value of annuities and the present value of annuities. So these are the type of concepts we have as of now. So what are the types of cash flow? Single cash flow, one time payment or receipts, multiple cash flow and the perpetuities. What are single cash flows? Right, it is a one time payment or receipt. Whenever you are getting a single payment in one time, like receipts you have been received or your payment has been made, it is called single cash flow because you are doing it once, so it is called a single cash flow. What are multiple payments? When you are doing series of payments and investments or receipts are generated, example annuities are there. So it is having in a regular basis, you are doing on a series of regular basis, so it is series of payments and receipts, right? What are perpetuities? Infinite series of cash flow, right? Perpetuities, if you go infinite series of cash flow, example perpetual bond, it has an infinite and a continuous flow of cash flow, so we call it perpetuity. So these are the type of cash flow we have. In time value of money, one is single cash flow which we do once, like a one time payment or receipt. Multiple cash flow which we go on doing, right, which are a series of payments and receipts, example are annuities. And perpetuities are infinite series of cash flow, example perpetual bonds. So what are the applications of it? What are the applications of TVM, time value of money? What are the application? It helps in investment, right? It helps in calculating returns, comparing projects. So suppose you have two investment opportunity or two projects to invest in, right? Suppose you want to open a business of a grocery shop, and one side you want to open a business of some food stall, right? So these are the two businesses you are having. You have in your mind, you want to have a food stall or a grocery shop. Oh, how you will calculate that returns? So you will calculate it by time value of money. Suppose you are guessing that if you are investing 1 lakh rupees in a food stall, right? In 5 years, it will give us the revenue of 100 crores, suppose, and the revenue of 10 profit of 10 crores. And on the other side, if you are investing in grocery, you are investing 1 lakh rupees, it is expected to give 50 crore rupees and 50 crore rupees of revenue and the profit of rupees 5 lakh. So where you will invest? After comparing all these things, you will be able to invest in the food stall only. Why you will invest in food stall? Because the revenue generation capacity, the profit generation capacity is much more in a food stall than a grocery store. So So as compared to the projects we want to invest, you want to invest in food stall. So you have come to a conclusion, right? So the time value of money shows you the concept and makes you a smart investor here, because you are coming to a conclusion why you want to invest and where to invest, so that you are getting a rate of return which is much higher in future, right? Because every money we invest, we wait for the time to give us the return. So the more the return you will be generating, the more happier you will be. Now, looking at the loans, it also determining, as we have also deal with EMI, right? On a day-to-day basis, also we deal with lot of EMI. So you have to come up with determining its EMI and total interest. What will be the loan we are taking? What interest we are paying, and what will be the total EMI after comparing the loan and interest by adding up the loan and interest amount, right? So we have to look what will be the time value of money in loans, in terms of loan, where we can determine EMIs, also the total interest rate. Now, coming to the savings, it has the estimated future savings value. We have to calculate, because inflation is increasing, all the things are increasing. We have come to the increase of our saving also. If you are keeping our saving in terms of cash, in terms of liquidity, we are not gaining much. We are losing our purchasing power, because a dollar worth today is less than the worth of tomorrow, right? Sorry, a dollar worth today is more than worth of tomorrow. So wherever whatever purchasing power we are having today, we will be not having in the future, because inflation is eating our purchasing power. So this is the thing we have to look. Retirement planning, what are the retirement planning? Determine required contribution, right? What will be the retirement plan? Determine retired contribution, because when we are having our retirement planning, suppose as compared to today lifestyle, you are guessing the 20 lakhs will be enough for my post retirement. We will be investing for post retirement like 10 to 12, 20 to 15 years, right? But what are your guesses? Like, will the purchasing power remain same? Will the purchasing power which you are making will be remaining same or not? It will not be remaining same, right? So what you have to do, you have to increase your investment, right? We have to increase your money in the investment, so that you are having a good retirement planning. You are calculating your inflation also, you are calculating your returns also, and according to that you are making a smart investment decision, and accordingly only you are able to get the returns from it. Also, we have to calculate the business valuation as a process assessing project profitability. As we have discussed in the investment terms only, when we are going to invest our money, when we are going to value our business, what will be the valuations of our business in the future? We are calculating that and making a smart investment, right? So business valuation can also be done through TVM, where we are when we are investing our money, we will be able to know what will be the valuation in the future. So it is all required to assess through time value of money. Through time value of money is a very good concept in investment, because it helps you make an smart investor, right? So we have a real life example as of now. What is a real life example? Suppose investment growth, we are investing rupees a dollar of 100 at 5% annual return for 10 years. So future value will be 1000 into 1 plus into 10, right? So what will be the future value at 5% annual growth interest? Annual interest for 10 years will be 1625.89. So future value will be 1628.89, and the loan EMI calculation will be, what will be the loan EMI calculation? Borrowing at 7% annual interest rate for 5 years. So we'll be calculating the EMI, will be having EMI of whatever the goal. Suppose we have a saving goal for $50,000, or in 5 years, $50,000 in 5 years at 6% annual interest rate. So we have to calculate all the examples, like if your investment if you are investing our money, we have to calculate what will be the future value of stock. Suppose if we are investing rupees $1,000, so what will be the future value? It will be 1628. If you want to calculate EMI, we are borrowing at the 7% interest rate. We have to calculate interest by principal into rate of interest into 1 plus R into T by the 1 plus R into T minus 1. So this is the EMI we have as of now. So this was the EMI. And what will be the saving goal? We have a saving for around 50,000, right? In 5 years at 6% annual interest rate. So when you are making a saving, when you are making a retirement planning, you have to know where we are investing our money and what will be the saving goal in that, right? And how much money I should invest, so that we are able to gain returns on that, right? So what are the factors that affect the time value of money? What are the factors that affect? Because it has the applications, it has a positive side as well. It helps you make a smart investment in smart investors. So it should have a factors also where they can be affected. They can be affected by time value of money. So coming to the interest rate, it has a higher interest rate increase, higher rates increase future value and decreases to present value. So when you compare with the interest rate, higher interest rate increases the future value and decreases the present value. If the interest rate increases, obviously the future value of anything, of a company, of a stock will be more, and there will be a decrease in present value of it, right? Also, longer periods amplify compounding effects. Like in the time horizon, if we look, the interest which we are paying, the interest which we are getting loan on, if calculating TVM, time value of money, there is a compounding effect in the loans and EMIs we have, right? So that could be much more huge than what we are expecting. Suppose even a few percent of differences which we make will be huge, right? So that's a very important concept. Whatever we are making it for, make it for longer shorter period. If you are calculating, we will be having a good future present value calculation. If you are making for longer term, the differences could be much more high. Also, what is the frequency of compounding? More frequent compounding increases return. So as the compounding is more frequent, suppose you are gaining returns on a regular basis and you are booking a profit, as we have discussed in our all the seminars also, making consistent profit is the key in the market. When we are making a consistent profit, we are exiting that, we are looking into the, we are making new positions. Suppose you are stuck in a stock, when you have bought only one stock and you are able to stuck on that, not making positions as now, but in one stock you are able to make some quick gains, 5-6%, 5-6%. In 2-3 months you have made 4-5 positions. So the compounding effect will be there, right? And you are able to make 25-30% profit in one stock only, and in one stock you are only able to make 5% profit. So the compounding effects comes in and you are able to generate more profits when you are generating the profits in more frequently, right? So this is also the thing which you should have in your learning. Now, what will be the cash flow timing? Earlier cash flow are more valuable. Suppose you are investing the more earlier, it is more important and are more valuable, because the early you invest, the more of the returns you will be getting, right? Because it has a time value. There is a money have a time value. Suppose you invest your money at, I will give you an example. You are investing your money. I will just add this slide for the example. If you are investing your money for, we are investing our money 10,000 rupees of money. We are invested at year 1, right? So we have 10,000 rupees of money as of now for year 1. We have 10,000 rupees. For year 2, for year 2, at if you are making a return of around 20%, for year 2 it will be 125. So we'll be having 12,500 rupees, right? 12,500 rupees. For year 3 it will come subsequently, right? And if we come at the year 10 position, we will be having a value of rupees 1 lakh. Just look at the potential it has. If we gain returns at 25% annual return, 25%. So just look at the returns which we are having. If you invest your money, if you invest your 10,000 rupees, right? If you have invested 10,000 rupees, you are having a value of rupees 10,000 in year 1. Year 2 you are having a value of, starting of the year 2 you are having a value of 125, like you are having a value of 12,500 for that, right? And for year 10, coming to the year 10, you will be having value of rupees 1 lakh. So this is the basic calculation we have. And suppose we have made an investment of rupees 10,000 for 20 years. So year 1 it will be same. Year 1 will be 10,000 only. Just look at this. Year 10 will be 10,000. Year 2 will be same. Year 10 we will directly come to the year 10. Year 10 will be generating you with 1 lakh. Okay. Year 20. Any guesses, guys? What will be the return in year 20? If you are having time, just look at the compounding effect it makes. We are investing 10,000 rupees at 25% annual rate. We are expecting the returns to be generated here, right? So at the starting of year 1, we have a value of 10,000, and at the end of 10 year we have a value of rupees 1 lakh. Just look at it. So at the end of 10 years we are having a value of 1 lakh. But if you have invested that money 20 years, like suppose we have started our investment journey 10 years back with the same amount, so what will be the value? The value will be 10 lakh rupees. It is not coming on the slide also. So this is the value we could have generated just by investing our money for the longer horizon. In 10 years we are getting a return of 10x, which is around 1 lakh, and in 20 years we are getting 10x of 10x, which is, so it multiplies 10x every 10 years. So this is the concept of time value of money. The earlier you start investing, the earlier you invest and give time to your investment, it plays a huge compounding role and it makes a huge difference. Here you are able to make, for the same amount of investment, you are here able to make 1 lakh rupees in 10 years, and for same amount of money you are here able to make 10 lakhs for the same amount of money. So this is the returns which you are able to get, and all the factors considering, right? All the factors considering, we are able to make 25% of return every year. So here we go. We have explained you with an example why time value is important, what important role is plays. Right, so we'll just delete this slide. If you want to click any photo or have a screenshot, please have, because this is a very important concept, how time values of money plays an important role. Now we are going to delete this slide. So also we have the limitations, right? We have the limitations on time value of money. We assume constant interest rate, right? There are some limitations which where we assume that there is a interest rate constant. We make interest rate like 10%, 5% constant. So but interest rate doesn't remain constant for the longer value of time. Interest rate keeps on changing, right? Interest rate keeps on changing, and it increases and decreases by time to time, from year to year, from quarter to quarter. So you have to look into that, how interest rate is playing a very important role in time value of money, because there has been constant increase and decrease in the interest rate. Also, it it ignores all the external market facilities, external factors like market volatility and all. It ignores all these things. Also, it requires accurate cash flow estimation, right? So it there is a limitations that it requires accurate cash flow estimation also, because to know to its value, because to know its investment opportunities has, it requires accurate cash flow estimations. So these are the things which we are seeing as of now. So there are some limitations also, there are some factors affecting TVM also, right? And here we are coming to the conclusion. Time value of money, we have, it is a cornerstone of finance and investment. While making any investment decision, time value of money plays an important role, because we will be knowing our investment, how much it will be worth today, comparing the future value of a stock. What will be the present value of a stock comparing the future value of a stock, right? And what will the future value of stock from now, the comparing the present value, we will able to differentiate between that. Also, time value of money aids in better financial planning and decision making, right? So time value of money also aids in better financial planning and decision making. So we have to look into understand that it helps to make you smarter investor, because we can make a decision based on our investment. Like we have given you with an example where you should invest. Either you should go for grocery shop, which will be having revenue of 50 crore and profit of 5 crore, or you should go for the business of food stall, where you will be having a revenue of 100 crore and a profit of 10 crore. So which is better option? Obviously a food stall, where you will be investing your money, because the future value is much more greater than the grocery store. It almost double. So you are calculating that, and you are investing your money in food stall and getting more profits out of it. The revenue and profits are more. Also, we can we can use the value of time value of money and optimize our saving, right? We will be knowing where we'll be investing our money, where we'll be coming to a end, where we have to invest our money, right? Also, the decisions we make, investment decisions, the we are making in the right investment or not, returns which we are getting is at good place or not, right? And also the loans, for calculating the EMIs, the interest, the principal amount, which is added up to EMI, and we are paying with all the interest and principal, is it good for us or not? Is it helping us to gain at the present or not? So we have to calculate all these things. So we have come to our conclusion of the time value of money. What we have explained, we'll just go through, just brush it up and close our session, right? So time value of money, we have we were starting with that, where we have started to understand the core concepts and application. We have started to understand what was the introduction to time value of money, TVM. What is the definition? I will repeat it, the definition once again. The time value of money is the concept that money available today is worth more than the same amount of money in the future due its potential earning capacity. Just remember, the dollar today is worth more than the dollar tomorrow, because your purchasing power increases tomorrow. Inflation, due to the inflation and many interest rates, right? So your purchasing power keeps on decreasing day by day. Also, it helps in the foundation of making a smart financial decision. At third, we had, why does money have time value? So we have a opportunity cost, we have a inflation, we have risks and uncertainties, we have preference for liquidity. So all these things are important. What are the key components of TVM, time value of money? We have a present value, we have a future value, we have an interest rate, the time period, the payment, right? The present value is PV. You will calculate current value of future cash flow. The future value we have is FB. The interest rate is R. Return, rate of return, or the discount rate, the time period, duration over which money grows or sinks, that is also important. And the payment, PMT, periodic cash inflows or outflows. What is the basic TVM formula? Right, future value, we have a future value is equal to present value into 1 plus R to T. So this is the future value, present value is PV into PV is equal to FB by 1 plus R into T. So this is a present value you can get. Just reverse the future value and present value from here. You will get the future value and present value just by reversing it. In future value, we are multiplying with this formula, and in present value, we are just dividing the future value by that. So this is the formula for it. What are the cash flows we have? We have a one-time payment, or whenever we make a one-time payment cash flow or receipts, it is called single cash flow. And multiple cash flows are series of payments and receipts we do. And perpetuities are infinite series of cash flows, example perpetual bonds. And now coming to the application of TVM, right? Investment, we have to look what are the application. We can use it in investment purpose, we can use it in loans, we can use it in savings, you can use it in retirement planning, whatever what the amount is required to be retired perfectly. And by assessing the business valuation, and what will be the valuation of business, right? So we have to look after all the things. What are the real life examples we have? So real life examples are investment growth, investing rupees 1000 at 5% annual interest rate. If we look, we will get the future value of the stock. It will be what, 1628, right? So these are the real life examples we are having. What are the factors that affect time value of money? The interest rates affect, the time horizon, the frequency of compounding, and the cash flow. So all these things are there which affects your time value, right? And what are the limitation? It assumes constant returns. Whenever you are assessing the time value of money, we assume a interest rate to be constant, which is not in most of the cases, right? So because interest rates keep fluctuating, also we have to ignore external factors like market volatility. Whatever is the market volatility and whatever the external factors, it ignores all of the things, right? Also it requires accurate cash flow estimation. And in conclusion, what we have time value is a cornerstone of finance and investment. Understanding time value aids in better financial planning and decision making. Also, apply TVM principle. For by applying the time value of money, we are optimizing in better in financial planning and decision making, right? Also, TVM is a cornerstone of finance and investment. What will be the TVM? Apply TVM, time value of money principles to optimize saving, investments, and loans. So these are the things which we can do, which we can achieve through time value of money. So be rest assured, when you gain the concept of time value of money, you will be making a smarter investment decision. You will be gaining some insights. It helps you in better financial making decisions, right? Also, the decision making will be strong when you will compare the value, when you will compare the revenue, when you compare the future prospects of a business. So you will understand each and everything, right? So this was our performances for this stock we have seen. So these are the performances of our stock. Poonawalla has been out of 8 of the stocks, 5 stocks are positive for today. 5 stocks are positive and 3 are negative as of now. So looking into all the factors we have entered the Kriti. Today, Kriti, we have made our first target, right? The support level is given around the level of 153 to 158. This is the support area we have, the 5 point support area. Also, we are able to make some projections based on it. Right? We are able to make some projections where we are seeing we have made a 5% target area, 179 to 184. This is our first target area. The first position target is around 210 to 209 to 2214. The third target price we have around 230 to 235. So this is our target positions. We have made a indicator where we are able to look from this point we are seeing an increase at this, and from this arrow also we are seeing an increase in here. So Kriti Industries will be very playing critical role. From this level we are seeing an increase in Kriti Industries and will be showing some gain here. So do remember, if you have not entered the Kriti Industries India Limited, just do invest your money right now, so that whenever we will be reaching to our 5% profit target, the first position or this third target price, we will be reminding you and will be generating returns for you. So just remember that whatever will be the calls will be generating for you, for your benefit, and to make you a smart investor, a consistent investor, right? So this was the holding we have for today. You can just look at the holding. We have few holdings, 8 to 9 stocks as of now. We are holding it today, and it carry forwarding in future also. Also we have stock tracking strategy, updated stock tracking, which we have given. We have able to provide you with the tremendous returns, the return of 227% till date. And let's see what it holds tomorrow, like what we will be exiting tomorrow, what profitability we are increasing into. So just wait for that. Whatever the profit which you are making is on a live streaming, is nothing hidden out of it, right? So also, I want to remind you one more thing. We are here providing you with a live streaming facility. In for next 2 3 weeks, we will be going. It is free for only next 2 3 weeks. We will be going more for a VIP mode after that. And once we go for the VIP mode, we will be only dealing with the serious client. The serious client means the serious investors who want to make serious money with us. Also, we don't only deals with equities, we also deals with forex. We also come up with forex market, right? So we will be dealing with that also. We'll be trading in forex, we'll be making some quick gains in forex like the equities, but the gains will be much more quick, the gains will be much more higher in forex market. So after looking into that, we have to look whatever the positions we are making, the entries which we are making in forex, and we are able to generate more profit in it, right? So that's all for today. We have updated you with the current holdings, the market returns which we have generated, the time value of money concept which we have explained, what are the core concepts and its application from top to bottom. We are coming up with one concepts each and every day, which will be helping you in calculating the fundamental analysis to make you smart investor in the market. So stay tuned for the next live session. Till then, thank you, happy investing, stay